Now, I'm sure a lot of you will be aware from our session that we delivered last week. And for those of you who might be following our weekly reports, if not, you can go across to either our website and sign up for our weekly reports, or go over to our YouTube channel and subscribe to that at the Gold and Silver Club to get our regular updates here. So we've been long gold since the end of December. We've actually called the bottom on this market. It has so far continued to form a base after the FOMC meeting at the end of mid-December, where we saw the interest rate decision and the interest rate hike, which incidentally played out in a very similar way to what we saw in 2015, where a lot of the move was already priced into the market. 2015, within 2 days after the FOMC statement, gold reached the bottom and then rallied over 1,850 points. In the end of 2016, within 2 days, gold again reached the bottom. A lot of the move to the downside on gold and silver and other metals had already been priced in. We reached the bottom within 2 days after the FOMC statement, consolidated the following week in December. And in the final week of December, we actually saw the beginning of the January effects start on the 29th of December. There are a number of different indicators which gave us that confirmation. First of all, gold euro was breaking out. US 10-year bonds have already started to rally. The dollar started to break down early ahead of what we would normally expect at this time of year. And it gave us a signal to go long gold. So where do we stand at the moment with regard to the gold market? What can we expect next? Okay, so on the left here, if we go over, we'll go left to right. So monthly chart, we have broken and cleared above the monthly rejection candle, which formed over the month of December. And you can see here so far, we've cleared above last month's high. Fairly strong move so far, just within the first couple of weeks of 2017. On the weekly chart, very clearly a V-shaped reversal base, which is in development at the moment. And you can see that last 3 weeks worth of gains here. We've broken out now to 6-week highs, very strong base forming at the moment. And then gold, if we have a look at it based on the daily chart, yesterday was interesting. We got a pullback before the press conference with Donald Trump, and then subsequently after the press conference, we saw buyers come back into gold, closing near the daily highs, closing for a breakout above 5-week highs, and then overnight we've seen a breakout yet again to above the significant highs here, above 1,200, which is very important. 1,200 US dollars per ounce is a very key level for gold to clear. Another point to note is that gold has managed now today to break above the 50-day moving average, which will get a lot of investors' interest if we can close above that level at the moment. Do note as well, in terms of Fibonacci retracement levels, you can see here we've come up to a major zone around the 1205 level. So at this point, I am looking to see whether gold could continue to follow through, whether it has a strong close today, whether we close above Thursday's high, and whether we can build up some momentum here, higher high, higher low, and get a solid close above the 50-day moving average. That will be important moving forward to see whether gold has the legs to continue to follow through. So far, the move that we've seen in 2017, we've seen only very shallow pullbacks on gold. You can see here we've come back towards the lower end of our trend channel here. So it's very shallow, which is unusual for gold. In fact, yesterday it looked like we might start to get a bit of a deeper pullback until the press conference with Donald Trump. So this could be an outlier year in terms of the move that we're getting has been very much a very fluid move so far in terms of very shallow pullbacks, higher highs, higher lows, only very temporary consolidation of price before we break out higher, 2 to 3 days, which is unusual if you go back to 2015, 2014, 2013. Normally you expect a strong first week after non-farm payrolls, you get some chopping price action, then you start to rally again third and fourth week. But this year it's been very, very constant, the breakout that we've seen with gold. Now, what you do want to note as well, in terms of funds, they have not added to this position on the long side yet. We'll get the commitment of traders data through on Friday. But so far, what we've seen is a lack of participation from hedge funds at this point. But what has been interesting, of course, is we've seen an unraveling of sell short positions, which has been, we've seen a very strong and a very large net sell short position in the gold market following on from the summer months after Brexit, but particularly after the US election, where we saw this huge decline in price, where gold spiked up to 1,337 US dollars per ounce, only to break down 2,000 points. And a lot of that move was also getting priced in with a potential interest rate hike, which of course happened in December. But after that point, we then continued to see consolidation in gold, and it subsequently rallied. A lot of this is off the back of short covering, so traders unwinding their sell short positions, but we're yet to see investors and funds really start to pile into this on the long side yet. We haven't seen that participation. If we do get that and we start to see a lot more strong hands coming into this market, the smart money, then this is where we could really see gold catch fire and explode higher. Best case scenario for more upside targets at the moment, I'm looking at a move back towards the 200-day moving average, which takes us up to $1,268 per ounce. I do think we short term here are getting into a bit of a short-term overbought condition. Thursday, Friday, so today and tomorrow will be important. Today's close will be important. We need to get above the 1205 zone and close above it in order for gold to just follow through and get up to the 1230 zone in the short term. Beyond that, 1240 is the next major level of previous support, which could turn into resistance, which is also the 100-day moving average. If we get above 1240, I see a clear run up to 1268, and then around that level would be sort of the best case scenario in the short term here between now and mid-February for the longs, getting up to the 200-day moving average. I think at that point we could start to see a bit of a consolidation in price. So today will be important, the follow through, whether we get that or not. I will be watching that very carefully. What we're also looking at is some correlations, of course, with the US dollar index.